Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is the Forex Kickstart video where I take a look at three of the major currency pairs: Euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective. So let's get started. There is a report from the Washington Post today that said that Trump aides are considering tariffs on critical imports tied to national or economic security and applied to all countries but limited to specific sectors. That is less worrisome than some of the other proposed tariffs ideas that were bantered about in the markets. And as a result, we saw the dollar move sharply to the downside. Taking a look at the euro versus US dollar, the price was already moving to the upside, helped by some better than expected ISM services or PMI services data coming out of Europe. The price corrected off those levels down into this swing area. This swing area is defined by a number of different swing lows going back in time off this hourly chart, including a couple times last week before the market broke to the downside here and used that area as resistance. So moving above that level, coming back down toward it or into it, and just below it before that Trump tariff report came out, and we started to see the euro versus US dollar move sharply to the upside, the dollar to the downside off of that report. In the process, we broke above the 100-hour moving average, 200-hour moving average, 38.2% retracement, and moved all the way up to the 50% retracement of the move down from the December high to the December low. That level comes in at 1.0426 area, moved just above that level. And we saw willing or sellers come in as the market's taking a breather off of that sharp run to the upside. This 104.05 level, what's the significance of that? If I go to the daily chart and take a look at the 50% retracement of the range since the 2022 low to the 2023 high, the 50% retracement level comes in at 1.0405. So that's the significance of that level. That's why I have it here in the solid red line right through here. As you can see, we moved above it and then back below it. We're trading back above the level currently at 1.0417. On the top side, we're going to need to get above the 50% retracement level and stay above that level. If we're able to do that, then this swing area becomes the focus. The swing area is defined by, again, a number of different swing. Low is really forming this nice little floor right through here. That floor became a ceiling after breaking below it right here. And we saw in trading last week that the price high last week came within that swing area before rotating to the downside. So that 1.0448 to 1.0461 is a key, another key area on the top side we need to get to and through if the momentum can continue to the upside. So watch the 50% retracement, 1.0405. Below that, the 38.2% retracement of this move to the downside, along with the 200-hour moving average, it's got to be good support. We wouldn't want to see the price move below those levels and trading here today if the buyers are going to continue to run to the upside. Let's take a look at the dollar versus yen next, and this currency pair fell off of that news. The move to the downside came after the price tested these swing area highs that we saw in trading over the last few trading weeks. All those levels come between the 157.91 to 158.08. The high price came in just above the 91 level, as you can see, before rotating to the downside and breaking back below the 100 and 200-hour moving averages. If I were to draw a box around the ranges that has been confined, finding this pair, it's between the 155.88 and 158.08 level. So going forward, if the price were to continue its move to the downside, we would look for a test ultimately of that lower end of that red box down here at the 155.88 level. The 100 bar moving average of the 4-hour chart is moving slowly but surely up toward that low area right through here, increasing that level's importance going forward. On the top side, staying below the 100 and 200-hour moving average is probably the most bearish signal that you can get from the currency pair from a technical perspective in trading here today. That's going to be resistance. As long as we stay below that level, the bias remains more to the downside. Also of importance, I guess, is that the price, the highs that we've seen of recent times have seen higher price lows, and I get I said that right, but the higher price lows up through here. So breaking below both the 100-hour moving average and that swing area, or that trend line right here, increases that level's importance not only today but going forward. So be aware of that. Finally, let's take a look at the sterling versus US dollar. This is the hourly chart of that currency pair, and like the euro versus US dollar, we had seen markets moving to the upside off of the better PMI services data that moved to the upside was able to get back above this area through here, defined by different swing lows, including this low right here, these lows right through here, and then a lower here before we broke below that area and moved to the downside in trading last week. We moved up toward the high of that swing area right through here, rotated to the downside, and then got the Trump tariff news that pushed the price above the level and through both the 100-hour moving average and the 200-hour moving average. 38.2% retracement of the move down from the December high to the December low was also broken, and that is now a close support level, as is the 200-hour moving average. This area right here is where you won't want to see the price move below in trading here today if the buyers remain more in control. On the top side, we have the falling 100-bar moving average on the 4-hour chart and the 50% retracement level up here, providing the biggest resistance. Distance, as long as the price, if the price were to move up to that level, you probably see some resistance. It corresponds with maybe some other swing lows and swing highs through here. So be aware of that level at 125.81 on the top side. Other than that, maybe this 125.60 level might provide some resistance. So the dollar's getting hit. In trading here today, we're seeing stocks higher as a result, and also yields moving lower. So maybe another good day here for the markets. My name is Greg McCloskey. Good fortune to you trading. Bye-bye now.